Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free videos and analysis we give to you on a daily basis, it's really nothing in comparison to the membership you get once you sign up and join with the premium membership. Once you join with the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity, and we'd love to help you start making winning trades in the market. All right, so let's take a look at these charts here. We're going to start off with NVDA. And NVDA, this is a very bullish stock overall here. Very, very bullish. Bullish reaction to earnings and everything like that. Bullish chart. Everything is going spectacular for this stock. But at this very moment, I think we're due for some kind of a rest period. And if you're bullish on this stock, you know, this should be welcomed, because then you can get in at a lower price, and then when it breaks out more, you're going to be able to make more money. So right here, I'm going to tell you exactly why I think NVDA needs some kind of a rest. And you can see we came into this level right here. This was, I believe, Monday of this week. We've got Tuesday came into this level, and with a spinning top doji, and then right here we have a hanging man candle right here, came into this level as well and got rejected. So we've got hanging man and then spinning top. Both are potential reversal candles. All right, so when I say potential, it means potential, because you know you get a lot of spinning tops. Here we had a spinning top right here, and obviously we went higher after that. So it's really about more than just being a spinning top. It's about seeing if that spinning top actually confirms to the downside. And today, and the following day, we got this inverted hammer, and today we got that gap down, and we made a lower low and a lower high, and we ended up closing still below this level. To me, I think that NVDA is going to need at least some sideways trading here before potentially moving higher. But as far as bounce zones below, which is really what I think you should be paying attention to on NVDA, is this trend line. We've got this really nice trend line. It's been valid since back here in July. We got a bounce right there off of it, right here in September, right here later in September. So really nice angle. You can see that this stock is really paying attention to it. And that is right around where the between the 20-day and the 50-day moving average. So if we do head lower, like I think we're going to, could get a nice bounce zone down here near around, let's call it 185 to 180 is that bounce zone that you can be looking for. And I'm also going to draw Fibonacci retracement level from this major low right there. Let's see if it matches up with the trend line right against that low right there. Okay, so the 61.8 Fibonacci retracement level is down here near about 180. So you can see that right there, 61.8, and that's also right here at some support. So I'm going to draw that support line right there. So you saw it was resistance there, here, here, here. So for about a week straight, and then previously for 2 days straight, we saw sideways trading against that level. So that's creating a nice level of support. So to me, that's a great buy zone for a quick little bounce. So yeah, those are my thoughts on NVDA. The next one we're going to cover is Twitter. And Twitter is a stock that, to review, we liked it for a breakout here as we broke over this resistance. You can see that right there. Here's the resistance. There's the resistance. And then we broke over that resistance right here. But then yesterday, we did a video saying that Twitter was likely going to head lower, and that's because we broke back under this support, because once we break over resistance, it turns into support, and it turned into a false breakout. So this was a false breakout right here as we broke back under. So now it turned into a short, and really the best setups out there are false breakouts or false breakdowns. To me, they're better than breakouts or breakdowns, because what I've experienced in my almost decade of experience in the markets, I've seen that breakouts tend to fail, maybe 40%, 30% of the time, which is still a really good trading strategy, but false breakouts and false breakdowns end up working out maybe 90% of the time. So really I like this setup a lot, and you'll hear me talk a lot about it because I really like it and I think it really works. So that was the setup here. That's why we liked it for short. I still think it's going to head lower than where it's at right now. We could get a bounce today, maybe back up to this level, 1830, but to me that's a reshort, as I do think we're going to head back down to this lower trend line, which is where I think Twitter can get a bounce on. You can see it bounced here, there, right here against that trend line, and we're coming into that level soon. So just be ready for that on Twitter. The next one is Tesla, and Tesla here is one that to me again looks like a false breakout. We broke over this resistance right here, right there yesterday, and we mentioned here that Tesla longer term likely was going to head lower. We did like Tesla for a bounce up to this trend line, but we said most likely Tesla was going to get rejected up there, and then it was going to break these lows and head lower. So we didn't even get that chance to break out here. To me, this is a clear sign of a rejection of this breakout point, and that we broke lower right here. So to me, that's another false breakout. We broke over this resistance. You can clearly see the resistance level here. Clearly see it right there, and we broke over that yesterday. We closed over it, we gapped up, we closed over it, we made a new high, broke over it, and then today we gapped below it and ended up closing below the low of the previous day. Alright, so to me this is a clear reversal sign. I think that Tesla is going to head lower from here. As far as targets, we've got some pretty decent support right around here. You can see we bounced from it here several times, and here several times right here. That level is right around 335 to 336 is where I think that we could see a short-term bounce on Tesla. Just remember, to review why we think Tesla is going to head lower. We called for the breakout here on Tesla. It hit our target near 390. Then after hitting our target, we ended up heading lower right here, and this is a weak reaction. When you get a triangle like this, this big coil, you want to see a bigger breakout than to just this target. Okay, that was our target in the short term, and in order to remain bullish on Tesla, we wanted to see it bounce off of this trend line and off of this support again, but we broke back below it. To me, that was weak price action. And as you can see, we also broke that trend line too. So not only that, but we're also have the 20-day moving average crossing bearish below the 50-day moving average. So not a lot of great signs here. I think that Tesla's going to head lower. The next one is Netflix. And Netflix, we've been calling for lower prices ever since the reaction to earnings. So here was that earnings reaction. We said since then that that Netflix was going to head lower, and the reason being was day before earnings we have this inverted hammer, which honestly could have led to a big breakout, because here's an inverted hammer right there, but then the following day we had earnings, and you can see that big breakout. So to me, this on its own is pretty meaningless, but this combined with, and this with heavy volume, combined with the following day with heavy volume on the reaction to earnings on that clear reversal candle, to me that's why we got bearish here, because if it can't break out on the reaction to earnings, how is it going to break out after that? And this was the worst reaction to earnings that we've seen in a while. Obviously, it wasn't, you know, some big horrible reaction. We didn't gap down huge down to 173 or something like that, but it wasn't great. It wasn't strong. So we've been targeting for lower. We hit down here near 191 today. I still think it's going to head a little bit lower just to retest this support down here near about 190 to 189.50. I think it's at the very least going to retest these levels right here. So, but right there, the risk versus reward on the short side kind of putters out. So, yeah, playing it from short from about 200 down to 189. You know, that's a $10 gain. That's what, a 5% gain on that short right there. And if you're playing those options like some of our members did, then you're gaining, you know, multiple 100% in gains on that. So it just kind of depends on what you want to do on that. So as far as support, again, we could definitely see a bounce off of 189, 150, and I don't really like it short beyond that point. And that is unless, you know, we break back under this, but let's take it one level at a time with Netflix. The next one we're going to cover is Facebook. And Facebook, to me, Facebook is the best candidate to buy the dip right now. And that's because we're still above this major resistance. We had this resistance right here, right here, right here, here, right there, and here we are coming down below it and then closing back above it with a reversal candle. I think that Facebook is going to continue higher from here, and that's what we should be expecting. And the next one we're going to take a look at is Baidu. And Baidu, very bullish stock here, and this is another one that I really like to play for bounces. And that first bounce zone that you want to be keeping an eye on is about 251 to 252. So it looks like we could definitely be coming into that level, but you definitely want to be paying attention to it. So just to let you know why that level is key, because it was previous resistance back here, going back to the end of 2014, and we broke over those highs right here last week. Very strong action. So if we do come into those levels, to me it's a good buy zone. You know, honestly, I can even lower this support just a little bit, because the close of this week over here was 249.70. So that's a better level right there. Is closer to 249, 250 against that level, which is just, you know, a couple bucks lower. But the other thing too is we got this trend line that has been keeping Baidu up from right here, right there, right here. Got a bounce there. Here's a bounce, and that's a nice bounce zone. If and when we do get down there, I think it can get a bounce, especially because we have this gap up here that really may want to fill, and we may not fill it, you know, until after getting down here. So that's definitely a level you want to be aware of. The next one is Alibaba, and Alibaba here, again, you know, we liked Alibaba for a short up here against this trend line from about 185. We've been doing these videos on Alibaba ever since it hit that level. We said Baba was going to head lower. We got that. It hit our target down here near this trend line, and we said this is a key level here for Alibaba. Now, this is definitely a pattern here that you definitely want to be aware of. What I want to point out is we've got a bit of somewhat of a rising wedge pattern. You know, I'm not too technical on patterns. I don't like to use, the technical terms for the patterns, or the technical ways that, a pattern forms. I just like to use, my experience and seeing things happen before, because if you get too technical, you're going to get bogged down, and you're going to miss, a lot of plays, because, it doesn't always work like they write them up in the textbooks, okay? You'll learn that after being in the market for almost a decade. So what I want to point out is it looks pretty similar to what we saw over here on this action on Alibaba before eventually consolidating lower. Obviously, we rocketed up after that, and that's probably what it'll do after it consolidates. But right here, you want to see Alibaba hold this trend line, because if it doesn't hold this trend line, to me, it's going to be a nice short play. Another thing, too, is what you want to notice is while we've been trending up, you can see that we've got MACD has been trending down, so we've got a negative divergence. Now, you don't want to short blindly off of indicators. I think that's a horrible idea. I think taking any position based off of indicators alone is a really bad idea, but it's just something that'll could be a potential warning sign. So, but with this said, we still are within this trend line. We're holding this trend line, and I guess we got to give it the benefit of the doubt, especially if we break the highs right here. So if we break about 180, to me, that's going to signal a nice move higher for Alibaba, and that could still end up breaking, to the downside afterwards. But I like to play it day by day, day by day. If we break these lows here, near about 175, if we break 175, we're going to head lower. If we break 180, and these are really simple, easy levels to use, break 180, I think we're going to head higher. So really, we're trading sideways within this range here for about 3 days. And this is going to give it some nice energy for whichever direction it decides to go. So bullish over 180, bearish below 175. So let's keep it simple on Alibaba. So thank you for stopping by and watching the video, everyone. Hopefully you'll learn a lot from this and took some notes. Love to see you back in these videos, and keep learning. Even better, if you want to further your trading and receive profitable trade alerts like our current members are getting on a daily and weekly basis, it's a great opportunity for you to sign up for that premium membership. As soon as you sign up, you're going to get instant access to the profitable trade alerts, just like our members getting on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.